Hi, everybody. This is Dan Sheridan, Sheridan Risk Management, and we're going to take a look at plan for the week, strategies I'm looking for. Today is Monday, May 13th, and we're looking about a half hour before the market opens. And here's kind of the tentative plan here. Let's start looking at the SPX last week. Really, it all came down to Monday. Monday, we closed the previous Friday at 51.27. We closed at 51.80. So last Monday we're up 53 points. And from that point to the rest of the week, we closed at 52.22 on Friday. But Monday we hit 51.80, up 53. So Monday of last week was the big week. VIX last week went from 1349 to 1255. Now, for range-bound traders last week, it wasn't horrible. It was kind of depends if you're a long Vega, volatilities were a little bit low, so that's understandable. You had to grind up because the vols went down a little bit last week. The expected range for last week was 50.65 to 51.85, 51.89. So what does that mean, the expected range? Last week, there was a 68% probability we were going to finish in this range. And on Friday, we closed at 52.22. So we closed outside the range on the upper end of the range. Now, the thing you have to look at expected moves when the volatilities are low. I mean, it's easier to finish outside the expected range. Was only 62 points. If VIX were 19 or 20, it could be 80, 90 points. So it was, in most of the range-bound trades, butterflies, calendars, et cetera, you have lower, your break-evens are going to be closer in as the volatilities are lower. So it's all perspective. But last week, it was straight up. And now we're about 40 points away from the upper end of the range. So VIX is going to be up today. Looks like about 1336 as we open. But again, if you look historically, 90% of the time, VIX is up on Friday morning. You say, Dan, why is VIX up Friday morning? Well, because market maker specialists, of which I was one for many years, on Friday, everybody's coming in, more sellers of options. So what do we do? What do the market makers? I just, you might buy a few, but you're lowering the volatility as sellers come in. And then Friday morning, when the sellers go away, we just raise it back up. So that's why if you notice, 80 to 90% of Friday mornings, the vol will be up, especially in that first hour. So with all that being said, where are we? We're still very low VIX environment. We are near 40 points from the all-time high in a busy news week. And the news this week, mainly the biggies, you have the Tuesday PPI final, they call it. That's Tuesday morning before the market opens. And Wednesday is the biggie. CPI and retail sales come out before the market opens. Thursday, initial claims, jobless claims comes out before the market opens. So I think Wednesday, Thursday, some on Tuesday. What does that mean for a retail trader? Again, giving an analogy, you're going to you're thinking of going to the beach this week. Well, what are good weather days? So you say, Thursday and Friday are the best weather days. Okay, we'll work on that. What are the best days maybe that I think if you're going to enter a range-bound trade this week, what would I do it? Probably do it Wednesday afternoon and Thursday afternoon. Dan, why would you do that? Because by Wednesday afternoon, CPI would be out from Wednesday morning. And you could kind of see how the market's reacting to that. The Tuesday PPI final demand would have been out. And so you've at least got through a good batch of it. And by putting it Wednesday afternoon, you're kind of, you'd be kind of in the middle of the graph as you come into the initial jobless claims Thursday morning. And then Thursday afternoon. So those are my two entry days for range-bound trades. Wednesday in the afternoon, Thursday in the afternoon. As far as really shorter term trades, 0 to maybe 2 or 3 day, 0 day might be good today, Monday, and I will look at one in a second. But again, it's can you do trades? Yes, but be aware of the potential little bit of landmines. All right, you ready? We are going to give 5 or 6 ideas on trades. I will go through them at breakneck speed. And this is recorded. All right. Let me bring this up. First, let's start in the spec range. Then we will go to range bound. Number 1, VIX. VIX is down in the 12s to lower 13s. I'm going out to July 17, which will be the next big earnings cycle. And so I'm going out to 64 days, July 17. I'm looking to buy the 14s, sell the 18s. That's something I'm going to be looking at as the market opens. That spread's going for near $1. If I'm going to risk $1,000 and it's $1, maybe I'll start by 3 and then 3 more or something like that. But this is kind of the area that I would start accumulating a position there. The other thing is, I'm going to look at a SPY back spread. This could be used as a hedge against your range-bound trades, or it can be used as a standalone trade. A lot of people look at ratio back spreads as, hey, I think the market's going to be a big move, but you can also look at it when the volatility is low. So this is a little different concept going out to June 28, which is 46 days. And with SPY at 522, give you an idea of it, sell 2 529 calls in the June 28 expiration. So these are about 6.5 points up on the short. And then I'm buying 3 of my June 28s, 536, 7 points up from the short. And what's nice is you get a very nice credit, 522, you get a nice credit, no risk on the downside. If we have a big move up, the purple line, this is another trade. So those are the 2 spec trades. As we go over to SPX, kind of what I'm looking at today, and we'll see how the market opens. A couple candidates on the long Vega, and here's a calendar. We're at 52.20. So looking to maybe buy the May 31 and sell the June 4 days between the long and the short. Excuse me. And this would be about 18 days out today. But, whether I enter it, again, I'm looking at more key days. I'd be looking at same expiration, but I'd be looking to enter more when I mentioned. I think the better beach days would be Wednesday, Thursday afternoon. So wherever we are at that point, I'd be looking at a calendar. If we're up at these levels, up high levels near the highs, I'd probably take where we're at, like here, 52.20. You can see the calendar's about $4. Even if I'd probably go a little bit underneath it, it's the same price, right? So I keep my deltas in line, but I'd enter a calendar a little below where we're trading at, especially if we're near highs. But if you want to go at the money, that's fine. Vols are pretty low. If you want to be a little bit of short delta, here's a diagonal calendar. Again, I'm placing my short call about 10 points above where we're trading at, 52.22, this to close. And then I'm going out about 4 days, buying a strike 5 points higher. So basically, it's a diagonal calendar. It just gives you a little bit of short delta. Another idea I'm looking at from the butterfly end, I'm going out to June 14, which would be about 30. I'm going out about 32 days on this in a low vol environment. I'll be a little bit short delta, right? It's a good principle, short Vegas, short delta, especially with volatility low. I don't have a problem doing a butterfly, just how I structure it. So here, if I put my short a little bit above the market at 52.30, go 70 down and 65 up, I'm a little bit of short delta. So that can handle a 100-point move pretty good. And then last but not least, here's a calendar that I'm going to look at today for a 0 day. But I'd be looking to get out of the trade today. So here, depending on where we open, selling the May 13, probably at the money wherever we are, a one-day calendar along the May 14s. I think the volatility will stay up because you still have some news tomorrow, right before the opening, and the PPI final demand. So I think that'll keep the vol up a little bit. Buying the May 14, tomorrow's expiry, selling the May 13, and I look to be out of this at the end of the day. So those are some ideas, folks. And check us out at Sheridan Risk Management and have a great day. Thanks.